Yeah, so let's come back to Eric, because I think that's quite an interesting topic that you've just spoken about. Let's go through some of the numbers. So you have taken the PFS and said we're going to create a feasibility study. We're going to reduce the scale of this project just to get things going. So you have managed to lower things like the capex down to, from whatever it's 400 down to 100. Strip ratios lower. The IRR slightly higher. The ASIC's gone up. Right, I guess that's by dint of you haven't got the scale there, because you're talking about, and let's be clear, this is a low-grade bulk tonnage operation, and specifically we're talking about, I presume, one of those mountains behind you on the wall. Are we?
Well, there's three peaks there.
Yeah.
One, two, three.
Yeah.
And basically we'll be mining all three of those. This is an extinct volcano.
Yeah.
And you can see, hopefully you can see that project, that photo clearly, but what I see here is I see terrain that is very accessible, and everything outcrops at surface, so we're just knocking the tops of those hills off.
Yeah.
It's a beautiful thing, and it's very simple.
Right. So again, let's come back. Let's answer the question that the market's asking you, which is, in a gold bull market, price is $1,500 or so. I know your ASIC's about 1,000. There's money to be made. Surely you can go out easily and raise capital. You can put it back. You can raise money at the original PFS levels, can't you?
Oh, I think we can get the money to build this asset. The good thing is, we raised $25 million in August. That money will last us all the way through, and we're going to make it last us all the way through to EIA approval. We're about to file our EIA in the next few weeks, and then we're anticipating approval about 12 months after that. Now, once we've got that, we will be in a position to look at raising more money, and obviously taking a lot of the risk out of any development project is getting the EIA.
Right.
So,
but the question was different. The question was, in a gold bull market, $1,500
yes.
or so, you're making $500 an ounce here. You are still going with a smaller project. Why?
Because we're a $70 million valuation. We're a $70 million company. I mean, if we were a $500 million company, maybe we would go harder at this. But one of the key constraints that we're dealing with here in Chile is water, right? And let me just clarify this, because it's not as though there is a lack of water. There's plenty of water. We're right near to the Maricunga Salar.
Mm-hmm.
There's no mining going on in this district, right? There's plenty of water rights in this district. The issue is applying for water rights is one thing, but getting permitted water rights, which means you can pull water from the rights that you've been given, is another thing. And that's the issue in Chile. That's been generally created by a big demand on water further to the north of us, near the Atacama Salar, which is way to the north of us, and where you have all the big guys, the Codelcos with and the Rio Tintos and BHPs with Escondida, with Chuquicamata, et cetera, et cetera. There's been a huge drain on water supplies in those areas. And so the government's gone, whoa, let's just slow down here. But it's applied the slowing down to the whole country as far as water is concerned.
Okay, it doesn't answer the question. Are you able to go and have conversations with institutions, funds, or strategic partners to give you more money to do the larger project, yes or no? Or are you telling me that because of the water constraints, people are not minded to fund you for the larger level project? Because I'm just trying to answer the question which is being most asked about.
Yeah, no, it's a good question. So if we had the water rights and we had permitted water rights for 80 litres a second, which would satisfy an 80,000 tonne a day mine, we would probably try and aim to build that. Once again, constrained by our balance sheet and by the size of our company. We're a junior company. So what we've done is we've elegantly, I think, looked at how we expedite the startup of this project without getting entwined in this water rights, water permitting issue, and that is to truck the water from Copiapó to the project.
Got
now,
it.
140 kilometres, and we can do that. It raises our ASIC to about $1,000 an ounce, as you've pointed out, and that's at the moment. I think we're going to show that we can work on bringing that ASIC down as we get closer to and into production. But the idea is to bring enough water up, and 20,000 tonnes a day requires about 2,000 tonnes of water. So it's about 10% of the mineral that you put on the pad is required to be irrigated on the pad. So we need to bring up 2,000 tonnes a day of water from Copiapó, and we can do that in trucks, in tankers. We've costed it out. It's about $1.50 a tonne. That's haulage costs, water costs, all-in costs to drive from Copiapó to the project, 140 kilometres. Imminently doable. A lot of people go, but how do you do that? Why are you bringing water up in trucks? I mean, it's like any other consumable. We're going to bring fuel up in trucks. We're going to bring explosives up in trucks. We're going to bring everything up in trucks. And there's a major international road that goes from Copiapó to Argentina that goes within 15, 18 kilometres of the mine, right, of this peak. So, the infrastructure is fantastic. And so bringing up trucks is not an issue. And I want to say that because I've had a lot of people go, well, the only pushback here is the water. And I said, well, why? Because we've got a solution for water. 20,000 tonnes a day, 2,000 tonnes of water, got to come up the road every day, imminently doable. And we've costed it, we've worked it out, and it's being built into our EIA. What it does do is it speeds up the EIA process because we're not pulling water out of the ground. So we're going to have an EIA approved according to our consultants and according to all the officials that we've been talking to, the authorities, etc. We'll have an EIA approved within about 12 months. And that's running fast in Chile, right? If you look at our, the latest EIA that was approved in Chile, it was for Salares Norte, a big gold project belonging to Goldfields, which was, 150 kilometres to the north of us. They got that approved in 18 months, but that involved tailings deposition, involved permitted water, very complex project in comparison to what we have. So that's what it's all about. In this market, and you're right, gold's 1,500, but how long is it going to be 1,500? Well, it could be more than 1,500, obviously, but, the idea is to get to production as quickly as possible. That's what will create value for us and enable us to increase production from our initial production rate of maybe 100,000 ounces per annum to plus 200,000 ounces per annum.
Yeah, always.
The way to do that, get started.
Yeah, I agree. Look, so back to the model. So I understand the model. You've been very clear what your model is. Get into production as early as possible to generate cash. You've got to get into economic production, not just production. Okay. Just and I know water is the big issue that people keep talking about, but let's just cover it off and move on because so you've probably talked about this more than you want to over the past year or so. So you're trucking water up. I don't know how many trucks that is and how many times a day that.
I'll tell you right now, very quickly. 25 trucks. Going up 3 times a day. So it's essentially 75 trucks. We're going to have physically about 25 trucks in a fleet.
Yeah.
That'll be contracted out. And that means a truck leaving Copiapó essentially every 20 minutes.